Huge market rally, the Dow surging past 25,000, the S&P above 3,000. So what are investors looking for, and where do we go as this market tries to break out? I want to ask Mahoney Asset Management's president, Ken Mahoney. And Ken, before we start, I saw a survey, pretty intriguing survey that said 69% of investors thought this market would come back a year or less. Now, I know if you took a poll on Wall Street amongst the professionals, certainly in the last 2 or 3 months, you might have gotten a fraction of that number. What do you make of this market? Just how the resolve, the upside, I think it's confounded Wall Street, the experts.
But we always tell investors that the market kind of climbs by way of escalator. It goes up a little bit at a time, but when it comes down by way of elevator. I guess what we forgot to tell investors on the other side, the elevator can go back up really quickly as well. And in our newsletters to our investors, we were telling them, expect more of a U-shaped recovery, not a V-shaped recovery. Well, here we are, a perfect V, if you look at it on the chart, a perfect V-shaped recovery. So yes, it happened a lot quicker than anyone expected. But then again, the Federal Reserve acted a lot quicker. That April 9th talk with Federal Reserve that said be buying corporate bonds and buying items in a garage sale is pretty much about everything. I know March 23rd is the bottom, but for us, April 9th was a turning point for us to say, you know what, the worst is probably behind us, and we'll take this escalator ride back up again.
Well, and to your point, parts of the early excitement in the market today were about the economic recovery or signs of economic recovery. Initially everyone said it would be gradual. We see, a gradual move from April, but you take today, this April new home sales, just blew away Wall Street consensus. The analyzed pace, 623,000. Wall Street was looking for 480,000. That's a mind-boggling move in what most people consider will be the hardest hit month of them all. So can we extrapolate from that and say, yeah, you know what, maybe the economy, not just the stock market, a V-shaped recovery, but the overall economy?
It's so funny. We look through textbooks and theories. We always say, hey, the market always looks 6 months out, 12 months out. It's a perfect, discount mechanism. My gosh, look, right in front of us is a torn up road. We have nearly 40 million Americans that file for unemployment. We have GDP that's contracting this quarter, probably, 30%. And here, somehow the market looked around the corner and saw 6 to 12 months out that we'll get some type of science, whether it's, the Navax today or Gilead or Regeneron or one of these, horses that are going to come out with the vaccination. But the market did it again. The market sniffed it out, looked around the corner, and saw 6 to 12 months out. And here we are, real time, looking at the data. That's awful. The market sniffed it out once again.
So here's the thing, using any traditional valuation metrics, we know the market is quote unquote overvalued, except one, right? If you look at it versus bonds, the market, the stock market equities have not been as attractive since the 1940s. That is absolutely amazing. Does that inform you on maybe looking into some cyclical names, some dividend paying names, some places you could be in the equity side of the ledger?
Yeah, so, when you look at that, you say, gee, that's just amazing that you have that type of data right in front of you to think kind of where we are. But I still like technology. I still like to follow the leaders. I know people are jumping on Royal Caribbean today, up 12%, 13%. I think that's a ways off. And to me, that's going to be quicksand for some time. So I'd rather be following the technology leaders here.
Hey, follow the leader. It's been working so far. Ken, thank you very much.
Exactly.
And as we head